Hey everyone, it's Tom Karadza with another Rockstar Minute, and we're going to talk about Bitcoin in a second because it's definitely the most popular question we're being asked and even discussing in the office. But there is some concern with the real estate market, with specifically around the proposed changes to the mortgage rules that are coming on January 1st. So I'm not going to get into the details, but generally it's going to be a little bit harder to qualify for mortgages as of January 1st. And a lot of people, mortgage brokers, people in the industry, everyone's kind of chatting about this, real estate investors, on what this is going to do to the real estate market. Everyone's questioning themselves on the impact that this is going to have. And here's how we're approaching it. I want to bring a little perspective to this in a real short amount of time, is that we're not looking at the changes and what it's going to do to the market. We're asking ourselves, why is Canada deciding to make these changes today? Why are we not just raising interest rates? Like, let's look at it from that perspective. Why are we making mortgage changes and why are we not just raising interest rates? Because raising interest rates would definitely cool the market. And by making mortgages harder to get and harder to qualify for, that's what we're trying to do as a country, trying to dampen the real estate market. So why not just raise interest rates? And to us, the answer is really simple. All around the world, and this is a global problem, that we're not getting enough global growth. And as a result, we can't raise interest rates. Not only in Canada, the US can't raise interest rates. No one can really raise interest rates in any aggressive form. And because we can't raise interest rates, and specifically here in Canada, we can't do it in any aggressive manner, we have to turn to raising mortgage rates. Making it hard to qualify mortgages. So if that's the environment that we're in, if we're in this long-term environment where interest rates are not going to go up, what does that tell you and I about the value of hard assets, the value of things? As money gets cheaper with low interest rates, the value of hard assets, likely to us, in our opinion, is going to go up. If you couple that in the greater Golden Horseshoe area with 100,000 new people as immigrants coming into this area every year, if we look at a 10-year perspective, that's 1 million more people coming into the greater Golden Horseshoe. That's like 2 cities of Hamilton coming into the greater Golden Horseshoe. So now over the next 10 years, we have prolonged low interest rates and we have 100,000 people a year, or over 10 years, 2 cities of Hamilton coming into this area. What is that going to do to the demand for property? We really feel this next 10 years, you're either going to own assets in this area or you're not going to own assets. The mortgage rule changes are just a really little blip on the radar here. We are more interested in why they're making those changes and not the changes itself, because of the long-term trends that we're looking at. And really quickly on Bitcoin, part of the low interest rate environment and the lack of growth around the world is causing a concern and causing for people to look for a store of value somewhere else. And Bitcoin right now is an attractive option. And it's going to be very interesting to see where that plays out over the next few years, and we'll be watching. Until next time, your life, your terms. We're good?